All right. I know what you're thinking. Trey, that is such a cool sweater. Nah, I'm just playing. What is up, everybody? Welcome to Trey's Trades, where we give technical analysis on different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's just get right into the video. Today, we're going to be giving you guys an update on ticker symbol SENS, Senseonics. Ho, ho, ho. I am so pumped about this one, guys. This is going to be another freaking grand slam play that we presented you here at Trey's Trades. And my friends, my family, oh my gosh, I'm so pumped to talk about this today. If you couldn't tell from the title of the video, I think there's a lot of potential with Senseonics. That's a very bold statement to say, right? Senseonics could be a triple-digit company. But I'm going to present you with why, right? I'm going to show you the why. I'm going to show you the fundamentals of the company, what they do, why I think they have such potential, right? We're going to look at the most recent news catalyst. Not that I've seen any, but just to take a double check, you're going to look at their website. And then we're going to get into the meat and potatoes of the video, which is the charts. We're going to look at the 1 month chart as well as the 1 day, 1 minute chart to get both a macroscopic and microscopic perspective of Senseonics and what the chart looks like, right? We're going to look at 3 different indicators: the RSI, which is relative strength index, anything over 70 is overbought, anything under 30 is oversold. And then I've got the 200 EMA, which is this purple trend line, and the 15-day MA, which is this blue trend line. The 200 EMA is the exponential moving average, and this is a price action based valuation trend line over a 200-day moving period. It gives us a macroscopic perspective of price action. And then the 15-day MA is the moving average. Some brokerage accounts call this the SMA, the simple moving average, and this is a price action based valuation trend line over a 15-day moving period, which gives us a microscopic perspective of price action. We use these 2 indicators to give us an idea of when potential breakouts may be coming, right? Because if the 15-day price action varies from the 200-day price action and it gaps up between those lines, that shows you that there's some unusual trading happening, right? We align that with the overall volume coming into the stock. We're going to give you guys some entry points as how you can get into Senseonics without much risk, right? When the exit should be. I personally think this is a great long-term hold. Guys, if you buy into this, set it and forget it for 4 years, you are going to walk away very happy with the potential of this company. Let's just get right into the video. So what do these guys do, right? What's the why? Why should you invest your money here? Well, Senseonics Holdings is a medical technology company. The company focuses on the design, development, and commercialization of glucose monitoring systems. The company operates their glucose monitoring systems segment. It offers a continuous glucose monitoring system, the CGM, which is what I absolutely love. This is insane technology, guys. Eversense, which is designed as an implantable CGM system designed to continually measure glucose levels in people with diabetes. The company's Eversense system consists of components such as a sensor, which is inserted subcutaneously in the upper arm by a healthcare provider, an external removable smart transmitter that receives, assesses, and relays the data from the sensor and also provides vibratory alerts, and a mobile application that receives data from the transmitter and provides real-time glucose readings, alerts, and other data on the user's mobile device, such as a smartphone, Apple Watch, or tablet. Guys, this is insane. And then I'm going to show you their website really quick. Eversense. You can see what the product looks like right here. Pretty cool stuff. Creators of the first and only long-term implantable CGM. So if we explore the technology real quick, we're just going to look into this. The world's long-term CGM system. With the Eversense 90-day CGM system, you can actively manage your diabetes simply and with confidence. Eversense provides continuous blood glucose monitoring for up to 90 days, which is 3 months, via an under-the-skin sensor, a removable and rechargeable smart transmitter, and a convenient app for real-time diabetes monitoring and management. Guys, there's always going to be a demand for this in the market, especially with the world the way it is right now. Obesity is always growing at an ever alarming rate, and this is really crazy technology. And I'm going to show you why I think this is a triple-digit stock because of this in comparison to the current market. So we've got the sensor, which is professionally placed by your healthcare provider, right? Remains accurate even when compressed or while you exercise and rests comfortably just under the skin. We've got the transmitter, right? Which goes over here to the mobile app. This is removable, rechargeable, and water resistant. Sends data every 5 minutes to your mobile device. Never have to prick your finger, right? Which is the current utilizable method to measure your glucose and monitor that the blood sugar, right, inside your body. I got my undergraduate in nutrition, my friends. This is like reading the freaking Bible to me if I was a devout Catholic, and it's insane stuff. Provides on-body alerts even when your mobile device is not nearby. As I mentioned earlier, it does vibrate, right? It gives you on-body alerts. It tells you when you need to know certain numbers regarding your blood sugar level, right? Your overall glucose. And then it sends it over to your mobile app, your phone, your smartwatch, whatever you're wearing. Receive real-time glucose measurements on your mobile phone or smartwatch. No need for a separate receiver. Track events like meals and workouts and see them right on your graph to help identify trends. Share your data with friends, family, and health team, up to 5 people. Pretty cool technology. It's not just about the data, it's about the freedom it's given me. Matt Eversense, which is a CGM user. Now, we're not going to watch that video because that's not necessarily interesting, right? But the system in itself is very, very interesting, right? I'm going to show you their overall financial situation the last year. In 2019, 18, and 17, and 16, they have grown in overall revenue. We don't have much gross profit here. In fact, they actually aren't profitable yet. They have $327,000 negative in 2016. In this sense, they've actually gotten worse as a company, right? They've actually produced less gross profit, but keep in mind, right, that you're investing in the idea of a company, not the already potential. You're investing in the potential for growth, not previous growth. So watch that as you keep in mind what the stock is doing. They were part of a pretty heavy surge between Zomedica, Nomura, and Senseonics, right? They all had pretty awesome gains in the pre-market as well as the regular market hours. And, the news article, that's not what I'm interested about. What I want to show you guys is this. Dexcom. Dexcom is the current utilizable glucose monitoring system. These guys trade at about $420. Now, what is Dexcom? Well, we're going to pull them up and show you really quick. So we're going to just check out Dexcom, right? Pull up their website. Dexcom, real-time glucose data. This is the current utilizable system, and it's not anywhere near as high-tech as the CGM system, which is being used by Senseonics. Now the Dexcom G6 continuous glucose monitoring system make better diabetes treatment and diabetes management decisions with 0 finger sticks and no calibrations. Lets you see your glucose numbers with just a quick glance at your smart device and receiver. Get alerted when your glucose levels are heading high or low, and share your data with up to 10 followers. The Dexcom G6 is covered by most insurance plans. This is not the same though. If you don't have the finger prick, right? But this is not implantable. This is not 24/7 monitoring, right? The Senseonics system, which you would implant at the doctor's office, right, lasts for 90 days. That is 3 months that you don't have to worry about monitoring your glucose levels, which is insane for diabetics. Now, why does this matter? Well, if Senseonics replaces, and this is basically what you're betting on if you invest in this company long term, you're investing in the idea of growth, where this can go, right? This is the end goal. Senseonics replacing Dexcom, which is the current utilizable glucose monitoring system across all pharmaceutical sectors, right? So if they end up replacing this, you're going to see a large transfer in wealth. This company will probably die, to be honest with you. They're going to suffer. And Senseonics will have a huge push in revenue, which they don't currently have, right? Their overall gross profit, not very high. In fact, it's grown. It's decreased every single year. But that's what you're investing in with the idea of Senseonics, and that's why I think this can be a triple-digit company. Not tomorrow, not in a week, not in a month. This will take time. This is going to be a play that takes, maybe 4, 5, 6, 7 years to play out. Nonetheless, that is what you're investing in with the idea of Senseonics, and that's why I don't think this is a play you should just be playing for a quick swing. This is something I think you should set it and forget it with, which means that the overall way that you approach this in investing is going to be different. Now, nonetheless, we're going to look at the charts here and give you an idea of the best potential entry point into the stock so we can get you as much returns as we possibly can. Now, let's just get right into it. Right now, we're going to look at the volume. Last 2 days, we've seen the volume has been up, right? And in comparison to the previous days, volume drives volatility. Volatility drives higher price valuations. So we've seen a nice push. It's been stair-stepping. It's been gapping up in the pre-market, right? Here we gapped up in the regular market hours. It's been very clean movement. In fact, we're actually on an upward moving channel right now. Now, if you're looking for a long-term hold in the company, right, not for a quick swing, you're probably going to be waiting until this drops back, have a little pullback down to this level of support right here. Now, you don't necessarily need to do that, right? You could invest, here in the after hours at $3.67. And then if it does drop back down to about $2.82, you can always dollar cost average down, because I guarantee you a year from now, if this is a utilizable system, right, this is the new standard, you're not going to think about what you bought this at. You're just going to be sitting back thinking, wow, I wish I would have bought more. That's how that looks right now. RSI currently sitting at 65, which is pretty high, right? We're approaching that overvalued, overbought territory. Now, this isn't as simple as that. The RSI reading that does not necessarily mean this is overbought. It means the momentum is in favor of bulls. Typically, when bulls control the stock in the chart, right, that means that it's likely overbought and overvalued. It's a momentum indicator. We see that the momentum is with buyers right now. You don't want to buy things for the long term when they're overvalued or when they're overbought or when they're controlled by the bulls. You want to buy when it's controlled by bears, right? And this is not the current situation with Senseonics. If you're holding a position, that's awesome, right? If you want to swing this position, that's still doable. We're gonna play that out for you. But as a long-term hold, which is what I think Senseonics is, which is how I'm going to be playing it. I don't currently have a position. I will show you my portfolio here in Webull. I am in CTRM, AGTC, Nokia, and AMC. I'm going to be establishing a position in Senseonics, though. I'll tell you that first and foremost, because I really do firmly believe in this company long term. But if you're looking long term, I'd wait for a pullback. I think the best potential entry point within the next 1 to 4 days, right, is going to be somewhere around 278 to 288, depending on when this finally pulls back, right? If you're looking for a more immediate entry point into the stock, we do know we have this respected level of ascending support. We've got a couple different touch points to validate this, right? We can see that it's touched right here with 1, 2. I'm going to adjust this as much as I can. You've got 1, 2, 3, 4, 5, 6 different touch points here. I always look for 3. That to me signifies that it is a respected level of support. And with that being said, you can get into this as a swing trade right around what would be 371 in tomorrow. Or here in the after hours, if you see it pull back to maybe 363, that would also treat you pretty well. We had a pretty much trade sideways kind of day, except for, this huge gap up in the pre-market. But we do have the George W, the double bottom right here, which is typically a bullish indicator, signifying that we found a bottom and there is an upcoming bullish run. So I would not be surprised to see this continue a run into tomorrow. If you are looking for a swing trading opportunity, I do think it is going to present itself here with Senseonics, but you will know if it won't. If it breaks beneath this ascending level of support, you'll know that it does this because you'll see a wide range candle bar similar to this one right here. I'm going to outline that for you. That breaks beneath this level of support. This is a wide range candle bar. You're looking for something like this that signifies you broke beneath this level of support. Now, it doesn't need to be this big, but you get the picture, right? We're not looking for a candle like this that dips its toes underneath, right? So you can see it does that right here. We have that happen right here, right? It's a general science, a general art, not a science. But if you get a wide range bar that breaks it hard, you're going to know. You're going to know that it broke, and at that point, you're watching for a bottom. The most likely bottom is going to be predictable, right? It's going to be one of two levels. It's either A, going to be here, with this signified level of support with 3 different candle wick touches. Back here, we've got another 3 at $3.18. Or if it breaks beneath that, we know that we've got another level of support on this ascending level of support right here, which would be somewhere between, as I said, 277 and in the next couple of days, 280 to 290. So watch for that. You can very easily draw this up. Pause the video if you need to and copy this on your own charts. You're looking for as many touch points as you can. At least 3 are going to signify to me that you have a respected level of support or resistance. So that is a good entry point for Senseonics. If you're looking for a swing trading opportunity, ride that ascending level of support. Watch for a break right above the current level of resistance, which we see right here. And if we look here on we're going to go back 5 years to look at the all-time highs. We are approaching some pretty significant levels. We're looking very close to touching some crucial levels of resistance, right? We can see right here, 1, 2, 3, 4, 5, 6, 7, 8 different touch points, 9 different touch points, and we're coming up very close to that $4.06 range. And if we break that, guys, it's going to come with some pretty violent moves. That's my 2 cents. On the RSI indicator, we are extremely overbought. We're at 94.9. But don't let that deter you, right? We're not looking at the 5-year chart. We're looking at the 1-month chart. On the 1-month chart, it's 66. That's not as bad. That's not anywhere near as bad, right? We don't want to buy stocks when they're ripping at 66. Wait for that pullback if you're going to get in long term. But if you're looking for a swing trade opportunity, you could still ride the momentum. We've seen here in the past on previous trends that this does have the capability to touch up at 94, 88 in the low 90s or mid 90s as an RSI, and we're not quite there yet. We're not quite there, so it is completely possible that we do see that happen. Just make sure you set a trailing stop loss if you do end up swinging this stock. But we do have some nice confirmation saying this should continue a nice bullish run. We've got the nice gap here between the 15 MA and the 200 MA growing every single day. Last 2 days been gapping up absolutely beautifully. If you were able to get into the stock back when I presented it to you when it was around 80 cents or so, you'd be sitting absolutely filthy right now. And god dang, Senseonics has been another freaking grand slam here at Trace Trades. So I'm pumped for everybody out there that made some filthy money. Looking here on the 1 day, 1 minute chart, we're gonna look for some last minute confirmations. You guys can rewind the video and pause and check on those levels if you'd like to later. But I'm gonna delete everything and just come here and look at the price action. We did see that nice gap up here in the pre-market, followed by a nice ascending level of support and a descending level of resistance. And coming into the after hours or the pre-market, either one, if we end up breaking beneath or above either of these lines, it usually comes with some pretty violent movement. And seeing the overall trend, right, we do see we have double confirmation of the 15 MA crossed over the 200 MA right here. Nice gap between those levels. We would assume, based on trend, based on current bullish action, that you are more likely to see it break above this top trend line, this descending level of resistance, signifying another upcoming run. That is what I have for the video today, guys. I hope you enjoyed it. Please drop a like if you did. It really does help support the channel. And consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate link in the description box down below for Webull. Webull is a great brokerage platform. This is version 4 for the desktop. Allows you to start trading all extended hours in the pre-market and after hours. Use my link, you get 2 free stocks with $100 deposit. I receive a free stock. Great way to support the channel. And if you're not interested, my friends, that is totally fine. I just appreciate your support by taking the time to watch my videos. So that is what I have for you guys today. Thank you for watching, my friends, and I'll see you all next time. Peace.